Welcome viewers. So Nifty is back in this trading range consisting of two borders, that is on upside 20 period moving average, that is 25,956, and on the downside 50 period moving average, that is 25,762. Okay. So last week we were in the same trading range, and during that time it was neither breaking upside nor downside. Okay. So on Friday it appeared to have broken and closed above 20 period moving average, which was a positive sign. So we were expecting a moment on the upside. But what happened today is for 2 days it traded above 20 period moving average, even closed above 20 period moving average. But it has given up the level again today and again came back and settled in mid zone of 20 period moving average and 50 period moving average. So in a way, if you look at our weekly video, we discussed two scenarios. One is market made a high, healthy correction, then it is above to test the previous high level, okay, then breakout. Or else, if you look at more than 1 year data, September 2024, one peak, then again a peak, okay, so then it is a time for correction. So these were the two scenarios which we discussed in our possibilities, which we discussed in our weekly video. You can just go back and see what we discussed there. So there were two possibilities. So in downward scenario, so this will act as a resistance. This line, trend line, is likely to act as a resistance on upside. Okay, so today's candle somewhat, what do you call it, confirms to this theory. Okay, so this view got negated by this red candle. Okay, so what can we expect till the range is broken and closed either on upside or downside? We don't have any confirmation of positivity or negativity. Okay, so either we have to assume that this trend is in play or this trend in play. Okay, then define the stop loss and take the positions. If things don't work out, get out at the minimum loss. That is the only strategy. Sorry, that is one of the strategies. And another strategy is range bound strategies, where you sell nearby options or at the money options. Two at the money options, both CA and PE. You sell and insure them by buying far out of the money, CE out of the money, PE. This way, what you can do is one can do is they can limit their losses and take advantage of a decay in premiums due to indecision, due to range bound behavior. Okay, so only people who are having strategies are those who are sellers with good risk management. So in their favor, this kind of behavior of the market suits. So they are likely to make a good amount of money in this kind of a market, in this kind of a behavior. Okay, so till these two levels are broken and closed, so there is no confirmation. Okay, so if one asks me, out of the two, you have to pick one, which is the one that is playing out now based on today's candle. So I tend to believe that the scenario two is playing out. Okay, so those people who do not understand what is going on or whatever they are doing, nothing is clicking because of the inexperience or because of the inability to forecast the direction of the market. It is better to sit out or minimize. Don't trade full capacity, the usual capacity that you trade. So keep the size of trade under control and employ suitable risk management and money management in its efforts. So that should save some money. Okay. So if you look at 25,950 CE option price, yeah, this one is. So it's more like it was trading comfortably above 100 rupees yesterday and closed above 100 only. There is a gap down around 60 plus it opened, and 40 was the another high. Okay, then these levels are never again tested. So continuous decay of option premium. Only in this area it got tested just below 20. Okay. So it is a, what do you call, continuous decay towards expiry. So it's more like a non-directional strategy or seller's market. Okay. So you one need to be the person who is a pure buyer of options should protect their capital by employing stop loss and other risk management techniques. Okay. That's all for now. Take care. Bye.